Hello everyone. This is the pre-market report video for 18th January 2023 in terms of Nifty and Bank Nifty. Yesterday, Nifty closed positive and finally after 17 straight sessions, FII turns net buyer. They did net bought shares worth approximately 210 crore rupees and even DI2 net bought shares worth approximately just 90 crore rupees. Sector-wise, except PSU Bank which lost near 2%, all others closed positive with both energy and FMCG each contributed over 1%. Then after our market hours in US, both S&P 500 and Nasdaq opened flat, traded and closed flat. However, Dow Jones opened gap down of 80 points and continues to slide over 420 points. So, what caused this fall? There are three main factors to consider. First, New York State Manufacturing Index. Second, Goldman Sachs quarterly earnings. And finally, Travelers Insurance regulatory filing. First, let's talk about New York State Manufacturing Index. Last night, New York Federal Reserve released their state-related manufacturing index. Surprisingly, it came as contraction of over 32%. Their results showed that January factory orders were completely collapsed. Employment growth was stalled to standstill. Basically, it increased the huge recession fear. Last time it contracted this much was at May 2020. So, it affected the whole market sentiment. And the second one, Goldman Sachs is second largest index heavyweight in Dow Jones and the bank reported a bigger quarterly profit drop than the expectation and thus the stock price dropped over 6%. The same for Travelers Insurance, who is also index heavyweight, dropped over 4% because of poor Q4 earning guidance. Both Nasdaq and S&P 500 was mainly saved by Tesla. Since China Merchants Bank showed that Tesla again becomes top selling electric vehicles in China in January because of its recent price cut. And thus the Tesla share price increased over 7%. In case of major tech stocks other than Tesla, only Apple closed positive, all others closed negative. Just for info, Netflix is going to release its earnings report on coming Thursday. Anyway, in the end, Dow Jones lost by 1.14%, S&P 500 marginally down by 0.22% and Nasdaq marginally increased by 0.14%. And one positive thing here is that despite some weakness, US VIX fell by 0.7%, which is good. And which is not so good is oil price. Earlier yesterday, despite the surge in cases and all the dramas in China, in Q4 their GDP grown at 2.9% against expectation of 1.8%. This better economy data increases the confidence among the investors that Chinese oil demand will increase and this puts pressure on oil price. As a result, oil prices opened and traded over 1.5% up. At the time of this video, WTI crude oil is trading at 81 US dollars per barrel and Brent crude oil is trading at 86.5 US dollars per barrel. This is really not good for India. On the brighter side, dollar index is still hovering around 102. Regarding Indian areas in the US market, they were mixed, with bank areas closed significantly down despite its marginal increase in the Indian market, whereas both IT areas increased and closed near and over 1% positive. Then SGX Nifty closed at 18,122 at 3 a.m. Indian Standard Time, indicating a potential gap up opening of 30 to 35 points. So that's all about what happened on global market. Now let's discuss the India related info. First, RBI released a consultation paper that they expect to implement it from next financial year on Indian banks. Here I try to explain it in short and quick. At present, all Indian banks, both private and PSU banks, from their operational income, they allocate the amount as provision only if the loan becomes NPA. Just for info, the bank loan becomes NPA if there is no repayment of interest or principal for that particular loan for a period of over 90 days. But in this new expected loss-based framework approach, banks allocate funds based on the expectation of future possible NPA rather than waiting till it turns as NPA. This is my opinion. In the next financial year, this could affect the net profit of all banks by 1 to 2%. It's obvious, isn't it? If we allocate based on the expectation of loan loss, then we allocate more to be in the safer side. To be honest, there were mixed reactions among the investors, like it will park more capital without doing anything in the bank. I mean, banks make money only by lending. Allocating more funds to provision is not the efficient way for the capital. However, it is the international norm since it provides more transparency and strong balance sheet. And with some investors, they think that this will affect more on PSU banks than the private banks. Next info is regarding Tata Steel. A year ago, Tata Steel management informed the investors that they are going to reduce $1 billion of debt every year. That was one of the main reasons for the Tata Steel stock price rally. Now, this financial year, yesterday, their CEO gave the warning that they may not reduce the debt as expected due to their new capital expenditure. I consider this as negative. Third, ITC. Yesterday, their FMCG arm acquired near 40% stake in Sprout Life Foods and they signed a binding agreement to acquire 100% in the future. Just for info, Sprout Life is famous for their yoga bar. As a summary, last night US market ended on a mixed note with Nasdaq closed positive. So this could be good for Indian IT stocks today. Additionally, there is a chance that Reliance Industries may perform positively due to the oil price increase, windfall tax reduction, and potential increase of Europe diesel export. However, negative bank areas is the worrying thing. As for the items to look out for today, on the earnings side, there is a schedule for release of IndusInd Bank, Persistent System, and Central Bank of India. About macro, before our market opening at 5:30 a.m., first Japanese interest rate decision. It is a very important one and it got the potential to break the market. Then at 12:30 p.m. Indian Standard Time, UK consumer inflation and at 3:30 p.m. Europe CPI for December month. For both UK and Europe, the expected and projected consumer inflation number is 10.5% and 9.2% respectively. So anything above, especially for Europe as a whole, is a very negative sentiment. Anything below is positive. Then in the night at 7 p.m., there are a couple of US related macro are scheduled to release such as US retail sales data and US PPI data, producer price index. For December month, the expected PPI data is 6.8%. Regarding retail sales data on month-on-month basis, the expectation is to contract around 0.8%. Now coming to technical, starting with a candlestick in daily chart, Nifty forms a long bullish candle and there is no formation name that I am aware of it. However, there is one thing for sure, it forms a higher bottom formation compared to previous candle, which indicates the higher possibility of further uptrend from the current level. And in case of Bank Nifty, a doji candle is formed alongside followed by a bearish candle which is called bullish Harami cross formation. Generally, this formation considered as the confirmation for the price to move further higher. This suggests that there is a good chance that we'll see an uptrend in the near future. Then coming to moving averages and technical indicators. Day before yesterday, Nifty has moved below its 100-day simple moving average, which was a huge negative alarm. However, yesterday, it moved again above its 5, 10 and 100-day moving averages. So, as a moving average summary, it turns buy signal from sell signal. Even the technical indicator summary improved from strong sell to just sell signal. Then regarding RSI value, it has improved from 42 to 48.5. So that too turns neutral. However, in case of Bank Nifty, still the moving averages summary, it's neutral. And technical indicator summary, it has improved from strong sell signal to just sell signal. The RSI value has marginally improved from 44 to 46.5. Turning to options, for Nifty, from option change in open interest, almost no new call option open interest were added and huge number was unwinded between 17,800 and 18,150 and huge quantity of new put option open interest were added below 18,100. It's difficult to make any conclusion based on this data. So from overall options open interest data, 17,900 and 18,000 got the huge short straddle, and 17,900 got the maximum nearby put option open interest. So the next maximum nearby put option open interest is present at 17,800. So 17,800 is the strong support for this expiry. And the maximum nearby call option open interest is present at 18,200. So 18,200 is the strong resistance. For Bank Nifty, based on change in open interest, it's really very weird. Some number of new put option open interest are added at below 42,100, and significant call option unwinding took place at 43,300, 43,200 and 41,700, and lots of new call option open interest added at 42,300. Again, it's hard to draw any conclusion from this. However, based on overall open interest data, we can see that 41,500 level will be a strong support for this expiry, and 43,000 level will be a strong resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.